Hello, welcome to Friday's session. Not really Friday's session, but it is Friday. So today I just want to kind of go through the rate indicator with you guys. I do have my son in here today with me, so he's gonna be watching his cartoons on his iPad. So if you hear any noise in the background, that's my little boy watching his stuff on the iPad. Okay. I'm just gonna turn it down a little bit. All right. I managed to turn it down a little bit. I managed to turn it down a little bit. If it's still loud, let me know and I will turn it down again. Right? So if you can hear the background noise more than myself, then let me know and I'll turn it down a little bit. Okay, so like I said, I just want to go through the rate indicator with you guys and basically how you can apply it. I see so many patterns in answer to your question. I see so many patterns, but the best one that works really well is the one that works really well. People call it Quasimodo, people call it breaker. This is the pattern that works really well. Okay, so out of all the patterns out there, if you can study this pattern here, all right, this is the pattern you want to trade. Whether you want to sell here or you want to sell up here. Now the psychology to trade it, that I'll leave that one up to you. Okay. The psychology to trade it, I'll leave that one up to you, but this is the pattern you want to trade. You can call it head and shoulders pattern because it's got something like this. I don't know how they draw that head and shoulders pattern, but yeah, that one. Okay, is it drawn this way? Head and shoulders? Maybe. Yeah, like that. I don't know, but that's what you want to trade. Okay, so the rate indicator and how to use it, because I think I got 2 trades this morning just by I got 2 trades just by using the red indicator this morning, right? So I'm gonna show you the trades that I got and how basically I got into the trade. So I think if you look at this last up candle here, again, if you do have the infinity trading room indicator, okay, you will get the opportunity to use any color for your bearish order block. So in my settings, right, I've got my bearish order block as yellow and my bullish order block as green, and I've also showed my engulfing. I'm gonna show you the raid. Okay, so that's the raid. Let's click OK. Let me change the color of the raid so you can see it. So that will be red and that will be green. We're gonna change the offset to 1, so it's so close to price. Okay, so in here, this is what I saw in the morning when I jumped onto the charts. I woke up late, but it doesn't matter as long as you know what you're looking for. I don't have to wake up for 7 o'clock. I think I woke up like 7:30. So when I woke up, this was the candle that was trading, and I saw it somewhere here. So I realized we did have a rate above this high, and it's not just any high, it's a previous day high. Right, it's a previous day high. You can see it got raided here, there, and then it drove down, leaving this bearish order block, and at the same time it left a gap. And for the last, I think, 1 week that I've been here, anyone that asks me like what kind of order block, what's the highest probability order block, I mentioned that is the one with what, the gap. So once I saw that, I highlighted this. I highlighted this candle, and if you find the mean threshold of that candle, is right here. So the mean threshold is the body, right? So that's right there. And then I dropped into the 15-minute time frame, and inside the 15 minutes time frame, I saw that we had this last up candle inside that the hourly candle. So immediately I set myself a sell limit there with my stop loss just above that high, and I was looking for price to come all the way back down to this high, right? But if you're familiar with, give me a second. If you are familiar with Wyckoff, you will see that there was some form of accumulation in here prior to price going up, right? There was some form of accumulation in here prior to price going up. So what I did was, my partial was for this to close in. So from there to there, that gave me roughly, you can see 2.7, and I took my partial out from there, and then I pushed my stop loss to break even, and now I'm just watching to see if price will continue going down, right? But that was a very quick trade. It took less than can see less than 2 hours for me to achieve that almost 3 to 1. Okay, now if you look closely, we also have this candle being engulfed, right? That's what the E is for. So there's going to be some form of resistance, therefore it can go back up because the daily is bullish. It can go back up, but because I've taken partial, I don't really worry myself about the trade anymore. Most of the profit is off and the stop loss is at break even, so it can do whatever it wants, right? I'm not really bothered. The other trade that I took this morning is oil. All right, oil. I got, let me remove that. I got a rate on this candle, so I didn't have to be in front of the screen, because as soon as I came onto the chart, I obviously checked the rate because I want to see what rate we do have in the market, and I saw that oil did have one. And because I was looking at oil yesterday, it was trading at a, if you measure this high to this low, we are very low, right? And we also did have kind of a break in market structure here, so the retracement back down is gonna cause some form of a rejection. So when I saw the rate on this, I got excited because I knew that something was going to cook on this. So once this candle did trade back above the down candle, next candle open, it trades down. So as it's trading down to this order block, right, I took the buy, and again my first TP was there. I was looking for price to go into this imbalance as my second TP, but my stop loss is now at break even, and it can do whatever it wants to do, right? So that was the second trade that I got this morning, based off from the rate indicator with the order block, right? I think, let me show you something on currently happening on dollar index. So dollar index also rated previous day's high and then traded down. So I'm watching inside the 15 minutes for price to maybe trade back to that candle there, and then trade down, okay, and trade back down to maybe attack these lows, right? So if that will be the case, then if I look at euro should have something similar. So euro also has this, even though it's not a rate because it did close below, but it traded back above this down candle, so it's an order block. So I'm looking at this, not the cleanest order block in here because it's not clean, but if you look at the shape, it's similar to what the gentleman asked me earlier, and I said it is the best pattern to trade. So it has the low, high, low, high, so it's coming back, and then I do this, right? and I think British pound also has something like that. If you go into the hourly, British pound has also got something like that, where it took out this low, giving you that candle, and then it trades right back above this, and it's coming back inside. So in the lower time frame, can use this down candle as a potential buy to take price up. Think on the 5 minutes, yeah, this one here, right? And then I think it will probably come back and attack this high again. This is all based on the rate indicator, nothing technical. It's just the rate indicator helping me to identify where people have been stopped out. That's it. Okay, it's helping me to identify where people have been stopped out, and price is looking to go the opposite direction. Let me show you another trade that happened overnight. I did not participate in this trade. I'm just going to show you based on from the rate indicator. If you just pay attention to it, you will go in and find some nice trades based off that. Right, so I did not participate in this trade. I'm just saying that I saw it when I woke up. So we have this candle's low being violated here, right? And then price rejects and then comes right back up, trading above this. So that down candle becomes the OB. Price trades back down to it, and then it is rejecting, or it rejected. That's the same thing I did on oil, right? So I can get easily one-to-one trade just by setting myself up like this, right? You can easily get one-to-one, and if you can get one-to-one from this kind of setups using the rate indicator, then 5 of them is gonna give you what, 5 to 1, and it's very, very easy. All right. I think another trade not on this, this one here. We had a raid here, so as soon as the candle came back up above it, right? You can take the you can go into the lower time frame, okay, and then start looking for potential trade ideas. Okay, if it does leave you another block, then you trade it. So the idea around the rate is to look for an OB after the rate has happened. So obviously you can't see a rate here, you can't see another block here. If I drop down to the lower time frame, you will see that we have an OB here, right? And if you do understand, if you really understand other blocks, and you understand what you're looking for, because this indicator is there to help those who know what they're looking for. Okay, it's not for newbies, it's for those who know what they're looking for, especially in liquidity being taken. Okay, so on the 1 hour time frame, it gave another rate as well. So on the H4 it gave a rate, and on the H1 it gave another rate, right? So it trades back up, it comes right back to the order block, and then it shoots up. So you can get as many as I would have gone for on this trade. I would have gone for this high and that high. Why these two highs? Because the high time frame was calling for higher prices, so I would have gone for these two highs, and that would have given you 521. Okay, that would have given you 521. Let's look at any other setups that had formed. I took a buy on Euro-Aussie from I think that was from yesterday. Not yesterday, was Wednesday. I took a buy from Wednesday. Okay, again that was from a raid, so we raided. Now bear in mind, you have to do your analysis. Okay, you have to do your analysis to know what you're looking for in terms of price direction. You have to know what you're looking for in terms of price direction before you start using the indicator. If you just jump in and start using it, it's not gonna work. Okay, it's not gonna work. So you have to use you have to do analysis. So the analysis that I did on this pair is basically, we had a high here, we had a low here, we also had a low here and a high there. So I used the first one to that one, okay, and I was anticipating a reversal in here. All right, so if you remember, I think yesterday I shared something as in finding your range, and you want to buy in discount, right? So that's your range, this high to this low, and I want to buy in discount. Even if I use this one, okay, it's still in discount because this will be my low and this will be my high. So that's premium, that's discount. So we were trading at a discount regardless of whichever range that I use. So I used this one here, and price came down into, you can see it was a little fair value gap. So that was the analysis, but the actual trade that I took was based off from price giving me the rate. Okay, so once I got the rate, drop down to the hourly chart, and this is what I saw. Okay, after the rate, price went up, took out this short-term high, and then I bought this down candle. I should have used this one because that was the actual order block, this one here. Right, I should have used this one, but I keyed off from that one. Right, and then I took a buy from here, stop loss just below that, and my target was right there. If you go into the community, you can see I shared my, it was just about to take my TP, and I took a screenshot of that, and then I shared it in there. Okay, Let's look at, let me quickly look at the dollar index and see if it's doing what I'm expecting it to do. Okay, sorry for that distraction. I'll look at dollar-CAD in a minute. Give me a second. Let me take you through some of the rate, because I do get quite a lot of questions about how do you use the rate, how do you use the rate. So let me show you another one in here on dollar yen. I'm sorry, euro yen. Okay, we had another rate right there. So in the lower time frame, you're gonna look for your order blocks, and this is where I gave the order block right there. So you take a buy using that OB, and then you just find a high. So this one would have given you that's 2.7. Right, so just this morning, okay, you'd have done probably about 10 risk to reward by now, just by using the rate and following an order block. What else do we have? I think there was one here. Yeah, this one here. I did not trade it. I saw it, but I just didn't want to take that sell. So that is the rate, right? And then it gives you this order block. So depending on the time frame, if you're not comfortable with the order block, right, you can go into the lower time frame. Okay, you can go into the lower time frame and basically hunt for the last up candle. So the last up candle is this big one here. Let me see if I can find a smaller one there. So I'll use this one here, extend that one in time, and you can see price comes and hit it and then reject. So can you get some trade off from this one? Yes. That would have also given you, I would have gone for this equal lows into this imbalance. So I'll go for this. That would have been my trade. I wouldn't want to go past the imbalance in here. Okay. So that is another example of using the rate. Yes, I think I've gone through this already. GU rated, and it's come back to the order block. So, and I went down into the lower time frame to identify the order block. These two down candles. So think this, that's the one I'll use, and I'll buy long here, and I'll go and target that high. Alright, I'll go and target that high. How do we see equilibrium in a chart? You just have to measure your range. You just have to measure your range, your trading range. What trading range are you trading in? That should give you your equilibrium. So this high to this low. That's my equilibrium. On this one, I'll just take it. I'll just take it. Look where we are trading. I actually like the 70.5 level. I like the 70.5 level in a pullback. Okay, so I'll look to buy long here, and I'll leave my stop loss there, and then come back and target this high. You can go to your, for those of you that are crazy with price in the lower time frame, you can drop down to the 1 minute chart and wait for a breaking market structure, and then use that as your entry. So you can drop down to, like, if you wanna, because I know most of you like to trade just euro and pound. So if you have that luxury to trade just those two pairs, then look on the 1 minute chart and then wait for confirmation. So confirmation would be like price is coming down. Okay, price is coming down, and then maybe that's this. Then you can wait for the pullback and then you buy there. Okay, you can do that if you have the time to, or if you have the patience to watch this 1 minute chart to do that. Then by all means, you can drop down to the lower time frame and wait for the confirmation. So after 60 days, 50 days has been raided, you don't know what's going to happen next. Okay, let price show you. That's price break market structure, because it can continue going up. So let price break market structure, and then you target the 20 days low. You don't know what's going to happen next, so the best way is to wait for breaking structure and then target the 20-day low. This week, so this week I took a couple of trades. I started off with I started off with a buy on Aussie. I started off with a buy on Aussie on, I think, here. Oops. I started off with a buy here with my first TP above this high, and if you remember, on, I think that was on Wednesday, no, on Thursday, there was a news that came out for, I think it was the CPI for the dollar index, and then that one took me out. Sorry, here, it's this one here. My bad, not this one. This was just recent. This one. So I took a buy here, and I didn't get to my first TP. I think my first TP was above this high. Yeah, that's where my first TP was. So you can see I still have my markings there. So I took a buy on the H4 order block here, and then I was looking for this as my target. It did give me a push to the upside, and then during the CPI announcement in the afternoon, price did this. So I took my first loss here for the week, and my second trade was on Euro-Aussie for the buy, and Euro-New Zealand for the buy. So I got two decent trades on Euro-Aussie and Euro-New Zealand. So Euro-New Zealand, this was my trade, and it might sound a bit weird, but I actually hit the reversal as my TP. So my TP was right there. So that was my TP for this one. So that was my third trade, and I think Euro Yen. Yep, Euro Yen. I took a buy on, I think, Monday, the 13th, Tuesday. I took a buy on Tuesday here, and that also stopped me out. So I took a loss on this. I took a loss on Aussie dollar, and I got two buys on Euro Aussie and Euro New Zealand. So I got two wins. And this morning, yesterday I did not take any trade. This morning I took this one. I took this one and oil. So in all, I took 1, 2, 3, 4, 5, 6 trades. But I already had a buy from gold. I already had a buy from gold from here, which I'm still holding on to that position because that's a swing trade. So I'm still holding on to that position. Took a buy from here on the 1 hour time frame from here. From that order block there, raiding everybody out. So I took a buy from here, and I'm still holding to that one. So I got a couple of trades, and this morning I'm just looking for, you know, something to top up for the week, and then the rest is just me practicing. So I practice a lot. If you understand what you're looking for, okay, if you understand what you don't have to necessarily actually take the trade. You can demo trade them. I demo trade most of it just to hone in my skills. The ones that I do take, I've done my high time frame analysis and I take them with the rates, but most of them is going to be based off from the rate. Yes. And with the rate, if you know what you're looking for, you can trade it with anything. Okay, you don't have to be knowledge. You don't have to have any knowledge about the actual pair, looking for this and that and that. You just trade based off from what you see. Okay, you just trade off from what you see. So if you see a rate, just trade it. Okay, trade what you see, not what you think. Actually, gold, I'm looking to add to my position. I'm looking to add to my position on gold. So hopefully I've showed you enough I've showed you enough examples on the rate. If you have any question, you can ask. How do you want to get the rate? Just in the Infinity Trading Room, you can get the rate from there. Okay, you can get the rate from the Infinity Trading Room. I think someone did ask, how do you get this indicator? You can get it in the Infinity Trading Room. I was told to only trade USD pairs using index as reference. Yes, you can do that. It was a good advice. Okay, it's not bad advice. It's a good advice. You can trade the majors using the dollar index as the reference. But what you need to understand is it's not that pretty straightforward. You can use it for the euro, which is I think 90%. If you do a bit of research, I think the last time I checked it was about 90% correlation between euro and dollar. So whatever euro is doing, the dollar is doing the opposite. Right. So you can trade that with the euro. Not all the majors, because in my experience I've not seen it work exactly as, dollar goes up, all the majors go down. I've not seen it work exactly like this. Okay, most of the time it will be when dollar is trending. Okay, when dollar is trending, then all the majors will do the opposite, right? But when the dollar moves into a sideways market, these guys can do whatever they want, and that's when it becomes a little bit tricky to trade them. So Euro, GU, AU, NU, pretty much that's the ones that I trade. I don't trade UJ, I don't trade UC, I don't trade so this is dollar-CAD and dollar Swiss, right? I don't trade those three because I don't like them. They manipulate too much, especially these two. It's too much manipulation on them, so I don't trade them. This one occasionally I do trade it. Alright, so it's not straightforward as it's been taught, or as it's been shown to people. You just have to trade it with caution. Example, if you look at the move that happened on New Zealand, okay, in here when they gave their rate announcement, let's move here. When they gave that rate announcement, dollar was not trending, dollar was asleep. Okay, dollar was asleep, but this one ended up going up. Why? Because it has a mind of its own, so it can do whatever it wants to do. So is this your rate? It's based on any time frame. It's not just on the H4, any time frame. It's just that the H4 it's the best time frame to use it, in my opinion, because it's not very quick and it's not slow. Okay, it's not quick and it's not slow, it's in between. The daily takes a lot of time. The Aussie trade that I took this morning, it was a combination of the daily as well. Right, it was a combination of the daily. Understanding the daily, we went above this high, so price is coming back down a little bit. Right, we also had a daily rate here, and then price went above it, so there will be liquidity sitting above there. The daily works. Let me show you oil. I've used oil on the daily before, right here. Okay, I've used the rate on oil before, and there. I think this was the one I shared in the community. If you go into the community, this is the one that I shared, showing how to use the indicator. So the first 2-3 videos that I shared, I used the daily and the H4. So it's not just the H4, it's all time frames. It's just the ones that are easy to see. So not just easy to see, but at the same time easy to trade, and I find it to be the H4. Right, I find it to be the H4. You can see we have one right now. So oil, I need to go and check. Actually, it's here, so I don't need to go and check. I was saying I need to go and check the room and see if it did send the notification out. If you are in the trading room, you will go to oil, and you will see that at exactly 11 o'clock, 11 o'clock, you would have got oil rate swing low. So it's giving you an oil rate swing low. So oil rate swing low, then you come onto the chart. So this is what it's actually showing right now. You can use this one and buy straight away like this, and leave your stop loss below this low. Okay, and look for 121 for your first TP. All right, 121 for your first TP, and then 221. 221 is right there. Or you can drop down to the lower time frame and then use whatever strategy that you want to use. So if you want to use a pullback to optimal trade entry, you can do that. If you want to wait for the lower time frame to give you confirmation, you can also do that. So the rate gives you information. It's not a signal, it's just information to know that price has gone to a certain level that requires your attention, right? Price has gone to a certain level that requires your attention. So if you want, just go into your chart and then find out what is happening. So based on the information on oil, I think that's not a bad idea to buy, right, and get my 121 above this high. But always remember, okay, it's so crucial that you have to do your analysis first, okay, because you will get it wrong. Don't get me wrong, it's not perfect, okay, it's not the holy grail, okay. The rate indicator is not the holy grail. It's not something that is gonna make you not ever lose. Okay, they do fail, but if you do your if you analyze the trades that you will get after the rate has happened, you are gonna get more wins than you will lose. Hence, the probability of winning is, your win rate will go up more than, you know, trading conventionally with normal price action. So it's not, because someone might think that, okay, by using the rate indicator it should be perfect, it should get every trade right. No, that's not the right mindset. Any other question? Let's actually look at the euro trade together. I'm sorry, the pound dollar. Let's look at the pound dollar trade together. Okay, let's watch it on the 1 minute chart and then see how, you know, if you have time on your hands, you want to trade this, how you gonna trade it. So I'll watch, let me add one more piece of information to it. So I'll watch this as it's coming down like that, and then I'll watch my RSI to see if there is some form of momentum dying off. Okay, I don't use it to trade, but it's a good tool to, you know, identify when momentum is dying off. So if I get a break in market structure, I know we are currently trading at a level, at a crucial level, that price should reverse. So I'll use this to see, does price continue going down whilst RSI is showing bullishness. Then I'll just wait for the breaking structure. So on the 1 minute chart, if I was going to trade this and I'm trading just this pair, this is what I'll do. Let me remove this, change it to white. Okay, so I'll be sitting down just watching this pair like that. Okay, I'll not take the long because nothing stops price. Remember, nothing stops price from continuing going down, right? It can continue going down because it doesn't have to go up. If you think your analysis is right and it should go up, then create your own chart and push it up. All right? If you think you've done your analysis, therefore price should go up, then create your own chart and then push it up. Okay, since you don't own it, then wait. So let me reduce that and zoom in. I think it might come down here. I think it might come down here. So I'll anticipate them to break market structure from here. I'm gonna put the dollar index on the other side to see what the dollar index is also doing. I'm gonna change my high to this one to see, do they break this or does it just continue going down? Right, so you can do this for yourself. Don't think that you've done your analysis, therefore price should do exactly as you want it to do. Okay, price doesn't have to listen to you. I think I made that statement yesterday. Price doesn't have to listen to you. I think one gentleman did ask about dollar-CAD. Let me duplicate this and then check dollar-CAD. Right, I think dollar-CAD yesterday I posted a chart in the community to look at this level, but I would have to wait for confirmation. So that was the level that I pointed out to watch. But it has to give me some form of a confirmation, so I need some form of a market structure break in here before I'll look for the sell. So maybe something like this, right? And then I'll sell short to attack this equal low. If I don't get that, then I don't think it's ready. So the gentleman that did ask for dollar-CAD, I know it's trading at a level that you are anticipating some form of, reversal, but let it show you first. Don't go in assuming that it should do it. Let it show you first. Let me go back and check the other one. Let's see what's happening. Okay, so the level is showing some positive signs. I would have loved these candles, the next one, to break that. Hello. Hello.
Hello.
Hello. You have to choose one. I use the bodies for breaking structure, not the wicks. So price needs to close above the high. What? There's some milk.
Got the milk.
Go get milk. I personally use the bodies, so price needs to close above, the body needs to close above the high. He's going to get milk. The little king is going to get milk. right? It looks like, I don't know, it's not breaking the structure, so you just have to wait. But that would have been a very good entry, right? But it had, because it's not broken market structure, this thing can still go down. So if we break above this high, then I think you can start looking to buy for continuation to the upside. Until that happens, some people are different. Some people can buy it right there and then, but I like to wait for that breaking structure, and I would like to see straight up candle breaking it. So I want to see this in the break of structure. Okay, let's say this is the high. I don't want to see this. I don't want to see that. Okay, I want to see this. Okay, I want to see straight breakthrough, then retest, then buy. Okay, I don't want to see what it's doing now, because that doesn't show me enough strength. Okay, you can do this and that's fine, but it's, to me, that is not good enough. I want to see that straight break. Right, I want to see that straight break. You should get a notification. It should pop up. It's like it will show you, and it will highlight that one for you. Just go in there. If you go in there, click on any pair. Any pair, you see that they are there. How do you do your higher time frame analysis? To answer that question, let's see. Let's go to this chart. How do I do my higher time frame analysis? Just start from your monthly time frame, right? I think I did this the last time. Everyone trades differently, so everyone might use, and you might use a different time frame to start your analysis depending on the type of trader you are, but mostly if you start it from the monthly, you should be okay. So which pair? Tell me which pair, and then I'll do that. I'll show you how I do mine, and then you can take whatever you understand from that. Everyone is different. So Mimsy, sure, tell me which pair you want me to do, so I'll do that one for you, so you can get whatever you want to get from that. Okay, that was mimsy, but someone just someone just used dollar-CAD. So let's look at dollar-CAD. So remove all this drawing. I'm gonna start from here. So currently this is what I see. Okay, we've just purged a previous month low, and if you look at your trading range, this will be your high, this will be your low. Okay, so I'm gonna divide that into two. And that also there. By the way, you don't have to do this. Okay, you can just know on top of your head that this is what you're dealing with. Oops. So I'm gonna change this color. Right, and then I'm gonna drop down. So this is my monthly chart. Right, drop down to the weekly. In terms of the weekly, this is my range that I'm currently trading in, this high to this low. Right, this is my range. So I'm gonna do that same thing in here, but this time I'm just gonna eyeball it. Right, so we are currently based on a weekly time frame, because I cannot trade, I'm not trading this. Okay, I'm not trading this range. This is too big. Right, I'm not trading that range, so I'm gonna focus on this one. I'm gonna focus on this range. So inside this range, we are currently trading in, premium is very high. So there might be a potential price might come back down. Even though on the monthly is showing that we are in, low, the weekly is different. So it's showing that there might be a potential what price can come down, maybe after taking out this high, because there are certain things I don't want to talk about in here. Okay, there are certain things I don't want to talk about in here, so it will be hard for me to kind of communicate how I'll do the analysis properly. But I'll look for reasons for price to do what? Come back down. Okay, I'll look for reasons for price to come back down. So on my daily, I'll start identifying a breaking structure, because we are high. Based on the weekly time frame, we are high. Right, so I'll start looking for breaking structure. Now if it doesn't give me that breaking structure, I don't have to force it. Okay, I don't have to force it to happen. I will have to wait for it to give me. So right now, because of where it's trading, I cannot buy and I cannot sell. If I'm looking for big movement, I cannot buy, I cannot sell. I can only trade the lower time frame liquidity. So I can only trade the lower time frame liquidity. So I can trade on the 1 hour, looking for maybe a buy, an optimal trade entry, or I can use the 1 hour to trade my rate. Okay, but not the high time frame direction, because we are trading at a level that I'm looking for something to happen. So where CAD is right now, I will not do anything. If I don't want to scalp, I will not do anything, because it can go up and it can go down, and it's 50-50. So I wouldn't do anything. But I'll watch my, we've just gone above this, I look right back down. I'll watch this down candle. Once this down candle is broken, then as the other gentleman was asking, I'll look for my 20-day, low, this one roughly, for that one to be attacked. Okay, so once you break this low, then I'll look down here, potentially that one too, but that would be just too much. Okay, that's be, I think, 1, 2, I don't have my indicator here. 1, 2, 3, 1, 2, 3, 4, 5, 6, 7. Yeah, 20 low is here. So I'll look for this low. But for where we are now, there's nothing I can do. I hope that made sense. If it didn't make sense, unfortunately there are certain things I cannot talk about here, so you have to understand. Let's go back and check. This is very annoying. Very annoying. Let's look at Euro, because probably Euro is the one moving. Yep, I think Euro is the one moving. So Euro did break there. So that's the last swing low. Broken. Pull back. So I'll probably buy here and then just hold on to it. You can see dollar index is also trying to reject. So that's good. Yeah, I think they're moving the Euro. Any other question? Let's go right back here and let me check oil. Okay, oil is beginning to reject. Yep. Let me check gold. Check gold. Gold got to my level that I was looking for. All right, GJ. On GJ, I think yesterday I got a really good trade on this one. Where did I short it? Yep, yesterday I shorted up here. Where is it? Here. I shorted up there. I think GJ should go down. It should go down. Yesterday I shorted up here and I took my profit. I got 2 trades from this one on my demo account. Okay, not live. I took a short here. First one they stopped me out because I was trying to sell short here. I was trying to sell short this last up candle, and I think someone made, I don't know what announcement that person made, but whatever announcement that he made, it wasn't good and it just shot up. So when it did, it came into the last up candle on the H4 and I sold it up there, and it gave me another entry right here, and I shorted that one there as well, and I took my profit right there. Took some off here and then I took some off there. So I think for now, today's Friday, so I'll come back to it next week. I'll come back to it next week. I think it should continue going lower. It should come back down and make a new low because it's making lower lows. Right, you can see I got some designs. Let me quickly check the British pound because I think the British pound is moving. Right, okay, so we have got that break. Cool, we got the break. So let's see what's gonna happen next. DXY also made a swing high, so that's good. That should start going up. And let's see, Euro. Yeah, GBP will start going up. I'm gonna take it on my demo account. Okay, we're just analyzing together, so I'm gonna take it on my demo account. So I jumped in. Yes, after the low. Give me a second, guys. To answer your question, so after the break, you assume that the low is in place. Yes. So after the break, I don't want to see price come back down below this low again, because if it does, that's not good. So I will assume that they've made the low, and now price should go up. So if price comes right back down, the trade is invalid. It's wrong. It's gonna if it goes down here, that's it. That I'm wrong. Therefore, price is gonna go down. I'm not bothered with the trade anymore. If it breaks again, I'll go back in. Okay, that's you trading the lower time frame. If it breaks again, you go back in. But with this in place, should hold. Let's see on the 5 minutes chart. Now, by looking on the 5 minutes chart, we have to break this high. So we have to break this high. Right, cool. Let's look at oil trade, because oil trade is doing wonderful. Right, the oil trade is rejecting. Right, so based off the rate, we're getting oil trade to push up, and we've got the British pound also rejecting, right? So it's a win-win. It's a win-win. Hopefully, fingers crossed. Now, you don't have to wait for price to get all the way up here to pay yourself. Okay, as price is going up, depending on where you get in, you pay yourself. Right? Don't wait for it to get up here, because nothing is promised. Even though that's where I expect it to go, if you get in on this lower time frame, pay yourself. And let me see, so stop loss is down here. Let's see where 221 will be. Yeah, 221 will be roughly here. Now let me see where I got in. So I got in with this candle, and that candle right there, with my stop just below there. So I'm looking for 221 to pay myself. Oops. And then I'll let the rest run. See how far it's gonna go. Right. Roughly somewhere there. Okay, if we get here, I'm good, and then I'll let the rest do what it wants to do. You want me to do a top-down analysis on GU? Okay, let's see. Top-down analysis on GU. Let me switch on my fractal bar and see if I do have a fractal here. I'm gonna get rid of the rate for now. Yeah, so I do have a swing low in here, so I can pin from this high to that low, right? Because I have a swing low in here, that's why I'm doing that. And I'm gonna divide that into 2 and divide that into that as well. Not that one. Right, now based on the monthly, we do have this down candle traded through here, so I'll use that as my OB. So we are currently inside this down candle, not the best OB out there, but we are currently inside this down candle. We are also based on the monthly. Okay, let me show you. There are other things that I use, and from what I've done, based on what has happened down here, I think price should go and attack this high. So that's my kind of bias, that price should go and attack this high. Right, based on the things that I use to identify direction, price should go and attack that high. Okay, now I'm gonna drop down to the weekly. On the weekly, we have swing high to swing low. It's similar to the one on the daily, so I'm not gonna change it. And we do have this down candle prior to this move up. That'll be my main threshold. So we're currently keying up from the main threshold. So I'm gonna get rid of that one too, and drop down to the daily. We have, I'm gonna get rid of the fractals now because I don't need it. We have this low, that high, that low, that high, that low, that high. Now on this one, it did not close above it, so to me that's still suspect. Okay, it did not close above this, so to me that's so suspect that it might go down. Right, I just trade what I see. For me to be bullish, it has to go and close above that high. Okay, but it didn't. It took out the high and it rejected, so it has potential to go and attack this low again. Based on the way I look at price, it has the potential to go and attack this low. But since I'm not trading that range and I'm trading this low to this high, so I can do the same thing. Okay, so I'm gonna get rid of that weekly because I know we are trading inside discount, so the green area is my discount, so I can buy whenever I get a buy opportunity. So I'm gonna use this range now. And again, I'm gonna divide it into two. And inside that range, you can see we had this bullish order block, so that's going to be a good candle to kind of look for a buy. So that's the opening price. Drop down to the H4. Inside the H4 we have a gap or fair value gap in here. Also, if you do your fib retracement, it currently brought you to 618. So the day that price got here, right, if you were trading, you could have got yourself a long to go up and attack this high. That would have been the trade that I would have taken. This particular day, the day that price went up, I was looking for them to take out the previous day's low. So on the 1 hour time frame, I was looking for them to take out the previous day's low and then go up, but they didn't do that and price rejected, so I missed out on the move to the upside. But I wanted to see them take out this low, and they've done that today here and then broke market structure. So based on that, based on market structure, based on everything, it has the potential to come up here, and I will risk something down here to take me up there. Right, I will risk something down here to take me up there. So with the potential stop rate and price coming back to optimal trade entry, and again still in discount, I will look for the buy all day long. So that's why I spend the time on the lower time frame looking for the buy. But this pair, I don't trade it much because they manipulate it quite a lot. I love trading the crosses. Okay, I like trading the crosses. The reason why I like trading the crosses is because it's not too much subject to what the dollar index is doing. Okay, it's not too much. It is subject to what the dollar is doing, but not so much direct that when dollar is going up, these ones should be going down. So I trade the price action that I see on the crosses. So for example, the buy that I got on Euro-Aussie, if it's valid, if the trade setup is valid, I'll take it. Okay, if the trade up is valid, I'll take it based on my analysis. If it's valid, I'll take it. But on the majors, if it's valid, I still have to check what the dollar index is doing to make sure that, you know, the dollar index is conforming to what I'm expecting to see on the majors. So if I'm buying, I want to see that the dollar index has to go down, right? So I'm doing double work, whereas on these ones I just have to do my high time frame analysis and then just go. So everyone is different. Everyone has a different taste on price. Okay, I think in the next 4 minutes I'll be signing out. I need to go and have my lunch and get ready for fireworks for the New York session, because the New York session is going to be another different animal altogether. So I'm gonna get ready for the New York session and to go get something to eat and then come and see what I can do with the New York session. Anyone wants to shoot for the last question, and I will end here. See, Euro did not hold. Euro did not hold. British pound did. Interesting. Let me check the dollar index finally and see. Yep, dollar index just broke above this high, so that trade is not good. Dollar index has broken to the upside, so this is not good, right? It might hold, but at this stage I don't think this is good. The pound Euro pound is the one keeping this alive. Right, Euro pound is dropping, it's keeping this one alive. If not, then this trade is just not good. So if this one keeps going down, then you might survive with this trade, and that is basically Friday manipulation for you. Right, I think my time is up, so I'm gonna head out. I will see you guys next week. We'll see what I can do. All right, take care.